Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is February 2nd, 2013. Lots to talk about, so let's get started. All right, so good morning, everyone. Um, I do feel a lot better. Thank you very much for asking. Feel very much better. It's been 2 weeks since I've been sick, and I still have this kind of like this lingering cough, but yeah, I'm good to go. All right, so let's just get right into the charts here. But before I do, thank you very much for hitting those like buttons. Thank you very much for watching these videos, and thank you very much for, supporting me as long as you have. Again, I don't get paid for this for these videos or anything. And in the previous video, I did try to be a sales guy and try to sell you guys into, signing up for a website, and I didn't do such a good job. I don't even have a website, just to make that clear. I just don't want you guys to get suckered into these people um, who try to get you to sign up for, I don't know, 50, 100, 200. Sometimes I've seen $600 a month for information that I too, in my opinion, isn't as any better than what I'm giving you now. Again, what I've done in my history when I've actually learned how to do this technical analysis type trading was I went out and I've done that. I've signed up for services, I've watched videos, and I've done all of these things, and I found the best of, the best three of who I could find, and out of the best three, their best analysis. So, because there's different types of analysis. There's Fibonacci retracements. There's pivot points. There's all this kind of stuff that you learn. Head and shoulders, inverse head and shoulders, cup and handle, and all this kind of stuff. Now, I only grabbed the best of the three, and I included my best in there, and I came up with my own methodology combining all of the best that I could find together, and I come up with a formula that I release to you on these videos, and hopefully you guys are making a lot of money. In any case, just wanted to let you know that this video is based on my opinion and my opinion only, and there's you ultimately have to make your own decision on whether or not to buy, sell, or stop out, or hold. All right, so let's just get right into the charts here. Already in 2 minutes. I don't want to make this video too long because all my videos are just way too long. All right, so right now, let's take a look at what happened. But I don't want to talk about just this week. I want to talk about this level, which is the 149.51. Looks like what happened was we went right into the 149.51. This might be a little bit of a recap from last week's video, but let me just zoom in over here. That doesn't look too good, but we went right in this candle here. You can look at it. The high of this candle was 149.50. I was 1 cent off. It went right into 149. It went right into this level and had an intraday pullback. The next day we went and we broke through this 149.51, and then we pulled back and we closed under the 149.51, which told me that there is a probability that this guy could go higher. Okay, now I'm going to tell you right now that I saw a lot of people saying, oh, this is a shooting star, short the market, right? I'm over here saying, well, and I explained this in the other video, that we had higher volume, but the volume wasn't higher than the past 3 days. Now, talking about discipline, because I always talk about discipline in these videos, I always say that you have to follow your rules, and I'm very strict in my trading, and this is a perfect example of why. The perfect example of why you must have discipline, especially for your own methodology, meaning you could follow my methodology, that's fine, that's why I release these videos for free. But the whole point, the whole fact of the matter is, if you don't follow and you're not disciplined with your own methodology, then you're going to find yourself you know underwater just a bit. In any case, I'm going to be honest with you guys because I'm not charging for any of these services, so I'm going to tell you. I took a small short trade on the SPY on this day here, even though the volume wasn't higher than the past 3 days. Okay, I broke my own rules. I wasn't disciplined. However, whenever I break my discipline, whenever I break my rules, whenever I feel like the market's oversold and there's other indicators out there telling me that there's a possibility of a pullback, I will enter a short, but I will have a very small entry. Again, just like I explained in the previous video, if, say, as an example, you normally put in 100 grand, maybe just put 50 grand, or maybe put even 25 grand into it. That way, if it does go against you, it's not going to hurt you very much, okay? Or say if you buy a standard of one lot or 100 shares, maybe buy only 50 or maybe buy only 25 shares. Okay, go only 25% of your initial normal investment. I wouldn't really call it an investment, but your normal, I guess, yeah, it is an investment. Go only 25% if you're going to break your methodology rules, okay? And that way, if it does go against you, it's not going to hurt you that much. And what you can also do is stack it. You can, geez, I forget that word. I forget what it was called. In any case, what I'm basically trying to get at, I forgot the word, and I forgot the term, but you can continue to short as the market goes higher because you know that the market's going to turn over shortly. And so I guess you're probably wondering, well, before I jump into there, before I get all mixed up like I normally do, let me just explain to you still this 149.51. All right, so we broke through, right? We had the volume, but it wasn't higher than the past 3 days, so you shouldn't have taken the short like I did, right? But I only took like a 15 to 25% short, okay, of my normal size because it didn't follow within my rule set. Sure enough, it went higher. You see how my rules are very strict, and the reason why it's strict is to keep me out of trouble such as this. I'm not really in trouble, but that's the whole point of the reason why I had this methodology and I didn't put in my normal amount. We break through, we actually gap up, we break through, we go right in down into the 149, and then we have an intraday bounce. The next day we have the same exact action. The next day we have the same action again. The past 3 days, the 2 days later, we have the same exact thing again. We come right into the 149.51, and then now we gap higher on Friday after the reports came out. All right, but I don't want to talk about that because that's not technical analysis. So let's get into the daily chart. I'm sorry, the intraday chart. So this is a close up. This is a 10-minute chart. All right, so you see the SPY, we went right into the 149.51, come down, we break through it, break down from it, break through it again, and then we come down, and then this 149.51 holds up once again. You see, I mean, this mathematical calculation, I mean, we had this pivot point here, now we have this pivot point over here. These mathematical calculations work time and time again. I'm not getting a support or resistance line from any pivot point or any Fibonacci retracement. This is a pure mathematical calculation that nobody else has. We come up and we come down, we bounce off of this mathematical calculation again. Down over here, we come close, we don't quite get there, so you really can't count it. And by the way, I just want to make mention to remind everybody that once the 149.51 is hit, I do not consider that a support or resistance line anymore until it breaks through on the multi-day. So after it hit here on the intraday, I consider this 149.51 null, meaning no longer exists. But it's interesting to see how much and how powerful it does hold, right? At least for the intraday. Comes up, comes close to 159.51, and then we get a nice pop higher. All right, so with that said, unfortunately, I've done more mathematical calculations. One here that came out, I don't know if it's going to be that strong, but I do think the market should be at least pulling back, but it hasn't yet. In any case, there's a one. Excuse me. Sorry. All right, I had to put you on pause there for a little bit. Okay, so the one I have a calculation that I just made today, this morning here, just in case if I could find one that would be, more of a short term than a longer term. But I have a 154.10, a 155.44, and ultimately the 157 level that I created back in September 13. Okay. So keep your eye on the 154.10 level. Again, still be patient. Wait for the signals. And I'm only saying this because this is pretty much what I'm saying in a way of this is what I'm going to do. I'm going to wait for my signals. I'm going to wait for the volume. The volume is very important. I need a high spike in volume, okay, and some sort of reversal signal on the candle. The reversal signal on the candle is not as important as the actual volume itself. Sometimes the actual candle reversal does not show up. It does not show itself present, but then you get a large spike in volume, okay. But again, rules are rules. So just because you have a large spike in volume, you also need to have a resistance point as well as a reversal signal. All right, so what do I think is going to happen next week? I think we may potentially turn over. Okay, keep your eye on this trend line over here. Okay, we may go into this trend line. The 154.10 level is not to be not respected. What do I mean? The 154.10 level should be respected. Okay, I don't know if we're gonna get much of a bounce off of there, or that actually could be the potential bounce to begin with. The 155.44 level is a possibility, so keep your mind on that. Will we even get there? That's probably is everybody's question. I'm not sure, and I'll tell you why. And I don't know if we're gonna get there before we get a pullback. Okay, so again, what I need to do is I'm already in 10 minutes. I'm trying to make this video as fast as possible. What I'm trying to do is give you the bear overview and the bullish overview. Right now, it's the bullish overview is we came up, we consolidated right above this 149.51 mathematically calculated level for another potential pop higher. Okay, we do have this trend line here. I don't know how long this trend line how powerful this trend line is going to be. You guys all know I draw my trend lines very differently from a lot of people out there. Trend line drawing is an art, but I do like to draw my trend lines like this because it does work, especially if it coincides with the potential level up here. Okay, I'm going to zoom out real quick here just to show you the most common way of doing technical analysis and determining the resistance points, which are pivot points. Alright, if you zoom all the way out there, we're currently at 151.24. We have one all the way up here. One right here. Okay, so we broke through. Okay, so I'm going to just zoom into these pivot points here. We have a pivot point right here. Let me just draw a straight trend line over there as straight as I can. And then we have also a pivot point here. I only normally use pivot points if it's a true pivot. Like this here, I don't see it as being a true pivot. I mean, it can still reverse over there and have resistance over there, but I like my pivots after we have actual pivots, you know, like this over here could be considered a pivot, and it was, and that's why we had this pullback over here. Anyways, let me just delete these lines here, and what I'm gonna do, all I'm gonna do is extend this to the right here, boom, extend this to the right, boom, and then one more time. And then now we're just going to go all the way to the right to see where it ends up, and that's where it goes. So the first pivot point here coincides with this trend line right here. So again, we may not even get to the 154.10 before pulling back. We may get to this pivot point here, or we may start pulling back already. Okay, so that's my bullish outlook, where we still might have some more room to move higher. Okay, so if you are long the market, just keep in mind that what you want to do is you want to put your stops in place. You want to trail your stops. Okay, because you know, I'm not getting the signals, but the markets are being a little bit overextended. They need to be you know, they need to pull back just a little bit, and if they don't, and the government keeps on manipulating this market, that's totally fine. But that's why you just need to put your stops in place and make sure that you stop out when you're supposed to. And if you're already in the money, you should not be losing money. Okay, I just put it that way and that simple. The 155.44 level ends up in coinciding with the next pivot point. Okay, and then the last pivot point, which is the 157 mathematically calculated level, ends up being around there. So they're not exact, but I trust my mathematical calculations more than I do the pivot points, because the pivot points and trend lines again are more of an art, but these calculations are pure math, and they end up being a little bit more accurate. Okay, so now what is my bearish sentiment? Let me just pull that up for you. Oh, and another thing, the bullish sentiment right now is, look at the volume. The volume is just been so low lately. Okay, I mean, Friday, which was a way higher volume than it was on Thursday, was only 130 million. Thursday was only 108 million. Wednesday was only 137, and then Tuesday was 105, and then Monday was 113. I mean, it's just pitiful, volume. And like I always say in all my videos, when you have low volume, you have to give it an upside bias. It gives the institutions a chance to prop the markets higher because of their money printing. This gives a chance for institutions and the government to drive the dollar down, which in turn drives the market higher, and that is exactly what they're trying to do. And I guess I haven't really talked about this very much in the previous videos because the subscribers that currently watch these videos like Favco, they already know this stuff, but I should remind you guys, for your new subscribers, that when you have lower volume, you have to give the upside bias, because the markets, you'll notice when there's low volume, it'll just float higher. I mean, look at all of this. This is all just a float higher. You don't see candles like this one over here, like these candles over here, like these candles over here, or this candle over here. It's just all small little tiny candles, and it's just floating higher because the volume just isn't there. People aren't trading in the markets, and that's because of earnings. That's because of the weeks of options expirations. You're gonna have a lot of volatility within the day. So it's an intraday, but this is a daily chart, so you really can't tell. And you're gonna have government manipulation. And the best part about this manipulation is that, like I said, when you turn on the news and they say, buy, 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 because for example, a perfect example is Apple, and I'll get into that if I have enough time. But when Apple is at $700, actually, when Apple is at $700, you had a lot of people coming out, upgrading Apple, doing all this kind of stuff, saying Apple is going to get to $1,000, it's going to get to $1,200. At about $650, I said Apple is going to turn over already, and Apple turned over actually at about 700. So I was about $50 off. But had you shorted Apple at 650, and $50 from a $700 stock was not very much. I think maybe, I'm sorry, not 650, 680. I was $20 off. And then Apple turned over, and now it's at, I think it's like a $400 stock or something. I'll get to that. Anyways, to make a long story short, we're making an all-time high in the S&P. All the small guys are coming in, and that's why we get this float. The small guys, meaning you and me, the ones, however, that are unaware, not unlike you and me, that are just buying into the market, and that's why it's just floating higher. And all these institutions are smiling really big because they're just ready to put a trigger to sell off. Now, just keep that in mind. That's not 100% guarantee. It is a manipulation that we do have, but it is just something that we have to prepare for in case it does happen. And to be honest, we're close to another resistance point, so there's a possibility that it might. Okay, so I'm into 17 minutes. Why do I think that we could potentially be turning over shortly? Let me just load my drawings here. Switching over to the dollar chart, this is the daily dollar futures chart, okay? And then I haven't been talking about this chart for a while, but for you newcomers, you for you old timers, I don't know if I want to call you old timers, but the people who've been following my videos for a while, you know that the dollar is inverse to the market, dollar up, market's down, and vice versa, right? So for you new subscribers that don't know this, but you probably already do, when the dollar goes up, the market goes down. It is not penny for penny, but it is tick for tick. So when the dollar goes up, you'll see that the market will pull back, and vice versa, okay? And you can pull up your charts and do an overlap if you want to validate that. Let me just delete this drawing here because we don't need that anymore. And then I'll save this. All right, so I've redrawn this bottom trend line here again. Drawing trend lines is an art, and all you need in drawing trend lines are 2 points. All right, so the first point is here, the first pivot point, I should say. There's another pivot point here that got me to draw my trend line this way, okay, which is still a valid trend line. But after this pivot point here, I was able to attach this pivot point here, and now we're right into this pivot point here, which could potentially mean that we may get a bounce. Now, just because it's a trend line does not mean we will get a bounce. I have the 78.74 mathematically calculated level here, which worked perfectly on this pivot point here. However, and it was actually created on this day here, which was September 7th. Okay, so let's kind of zoom in over here. We created this somewhat of a hammer candle. I would have I would have liked it a lot better if the square was a little bit higher, at the very top. But what I really like is the volume is just tremendously high in the dollar. So this could potentially indicate a possible reversal. Now keep in mind, we still have the 78.74 support line here, which indicates that it could still potentially come all the way down into the 78.74 mathematically calculated level first before getting a bounce. However, because of the volume and because of this long tail on this candle here, there is a potential that the dollar might be getting the bounce. And if the dollar does get a bounce, we're going to have some resistance right here at these two moving averages as these moving averages come down. Keep in mind that the dollar is in a downtrend. We have a high here. We have a high, lower high, lower high, lower high, lower high, lower high, and I shouldn't say it's in a downtrend. It's in a forming a triangle. We have a low, higher low, a higher low, and a this, I guess you could consider this a higher low, but it did create a lower low pivot. To make a long story short, if you have this high here, sorry about that, let me just delete that, and we have another high here, and we have a low here, and then we have a lower low here. What does that mean? It means the dollar is in a confirmed daily chart now. It's just looking at the daily chart, downtrend. And what does that mean? That market is still in an uptrend, and it has no indication of turning over just yet. The only way I would think that this would turn over is if I get a close above here. You know, the dollar goes up here and then comes down, and then maybe pivots over here and then goes higher this way, and then that would be a confirmed uptrend on the dollar, which means the market should be shortly going into a downtrend. But that hasn't happened yet, and until that happens, don't for me, I'm not going to guess. I'm just going to trade the way I see it, and the way I see it is the dollar is in a confirmed downtrend. Therefore, the market is still in an uptrend, and I want to trade the market in an uptrend. However, right now the market, it just seems to be a little bit more overextended, and this is the bearish part of the market that I'm looking at, that the dollar might get a bounce. And because of the volume in the candle and the bottom trend line here, we also could be considered in a double bottom over here, which could be a potential. I wonder if I can get another. Yeah, there's another one here, so this could be like a triple. Yeah, actually, to be honest, this could actually potentially get a bounce. All right, so again, if the markets do get a bounce, I'm sorry, if the dollar gets a bounce, then obviously the markets are going to pull back. Do I think it's going to be a pullback? That remains to be seen. But once you're in the money, if you do decide to short the markets, then you automatically put in a break-even stop, and that way, in case the market does go against you, you'll be safe, and you won't be losing money. And if you don't put a break-even stop because it doesn't go in the direction you want it to go, always put your stops in and abide by your stops. If you do not abide by your stops, then you will find yourself in trouble eventually, and you know, it wouldn't be too good. And again, I don't play earnings, and earnings seasons, as far as the big boys, are pretty much done. All right, now this is a chart of Apple. I'm just gonna do Apple because I know everybody likes Apple, and Apple is a good indicator of the tech sector as far as the market goes. It is one of the bigger players in the Nasdaq, as well as the biggest player in the S&P 500. So, with that said, let's take a look at Apple. Gee, to be honest, I didn't really do a mathematical calculation on Apple because the pattern has not come out very well. So, you know what? I'm gonna leave this 476.39 level here anyway, in case we get into this 176.39 level with the 20 moving average. Right now, what I see Apple doing is it's just consolidating sideways. If it goes into the 20 moving average and possibly into the 476.39, then I may consider taking a short. Why do you ask? That I would actually consider shorting Apple. I'm not saying that I will. Now, just keep that in mind. I just want to make that clear. I don't play consolidation patterns because they just don't work for me, but it might work for you, so that's great. But for me, to be honest, Apple went down $1.87, okay, on Friday. The SPY not only gapped higher, continued higher, $1.54. So you tell me that Apple is in a stock in strength. Obviously, Apple is very weak right now. It could be one of those laggers, meaning if we do continue higher on Monday, then Apple may catch a bid. But this is showing a sign of weakness, obviously, simply because the markets are strong and nobody had any faith in Apple. And so just keep that in mind, that Apple still looks weak. All right, so I've been saying Apple looks weak for, I don't know, since I've been doing an analysis on Apple from, I don't know, maybe months ago. Apple looks weak. I mean, just look at it. We have a high, lower high, lower high, lower high, and now we're obviously making more lower highs. We're obviously in lower lows here. Apple is in a confirmed daily downtrend. And if you look at the weekly chart, Apple is just boom, just coming down. To be honest, on the weekly chart, I would say Apple might have a chance if it can get down into this 200 moving average on the weekly chance, uh, on the weekly chart to have a chance of having a pretty good bounce there. But Apple's just been coming down, 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 down. So it is a stocking weakness. You just want to keep that in mind. It is below these two moving averages up here, which is curling down. Um, so it may have a chance of bouncing at the 200, and it really depends on how fast it gets there. But I really think that we should have some resistance around, I mean, I'm sorry, some support around this area here. So if it comes down into this 200 moving average around the support line here, I would actually consider taking a long trade if it comes straight down in there. No consolidation patterns, obviously. And then you're probably going to have some support very coming up around the 425 level. Okay, but I don't know if I would take that as a multi-day trade, maybe an intraday, and then you're gonna have some support here at around the 400 flat level. But my ultimate level would probably be around the 355. Sorry, maybe the 360, maybe 365 level over here for a long trade. Maybe yeah, 365 looks good. So that's my analysis on Apple and the S&P 500, or the SPY, which is the ETF that tracks the S&P 500. And I know I didn't mention that earlier today, but thank you very much for watching these videos. Thank you very, very much for hitting those that like button. I know I only get like 6 likes. I know I only have like 60 subscribers, but the whole point is, I enjoy making these videos, but there's got to be a purpose behind it. Meaning, if people aren't going to watch my videos, then there's no sense that I make it. I know you, pretty much all of you are here for these mathematical calculations because nobody else has them out there. They've been working out pretty good. But again, thank you very much for coming by, for being more of a community. I don't advertise this stuff or anything. I was thinking about making a website, a forum, or maybe even a Facebook page where we can communicate with each other, and taking a trade would be a lot faster than making these videos and stuff like that. But I'm still debating on that because it's just really a time matter. Making these videos, compiling the videos, I mean, and then rendering the video, and then uploading it to YouTube is time consuming. So it does show a little bit more when I do see those like buttons being hit. It shows that there's a purpose for these videos. And again, I do appreciate you guys stopping by and taking the time out of your weekend to watch these videos. Obviously, I said I wanted to make this 10 minutes, or I thought I wanted to make it 10 minutes. I know I didn't mention 10 minutes, but it's already 27 minutes. So I'm gonna jump off and say, have a great weekend. Good luck to your trading next week, and God bless to you all.